Hey, thanks for tuning in. This is a stock market weekend review for the week ending January 21st, 2022. We're looking at a weekly chart of the S&P 500, and boy, do we have a lot to talk about. So those non-confirmations that we talked about in the last video, I just want to bring them up again because they're obviously playing through. We talked about this, or I've been talking about this since September, October timeframe. This dip, was really a dip where rotation needed to happen out of big tech, out of SMH and things like that, and into you know IWM and riskier assets, and we just didn't see that. And during that same time frame, the transportation average, DJT or IYT, failed to set another higher high, and I'll show you exactly what I'm talking about as the market pressed higher, right? IYT failed to set a higher high. So this is actually lower low each time. And we're about to figure out, right? Like, people think that we've seen a lot of pain, and there's definitely been some pain in the markets, but it's only going to get worse. Yeah, that's just generally how it works, right? When these bullish charts break down, when you get below the 40, like here, you're getting the weakness, right? Like, so even though, hey, we get down below, we come rally huge, this is what was coming. Like, this is all part of this unwind package, just like think of like the market makers running a script, and it's like, hey, we're no longer going to take the ask on all these securities. We're now only going to take the bid. And when that happens, you see this type of correction in nature. Either way, we're below the 40 on IYT. We haven't had an all-time high in the transports since May of 2021. And this non-confirmation is also evidence on the weekly, right? So for IWM, we did not see a move higher confirming in IYT or IWM. And we did see higher highs all the way up in November on SMH, on QQQ, and on SPY. And so all of those names led higher into the end of the year, into Santa Claus rally, and IWM and IYT and small caps did not participate. And for that reason, you're going to see a lot of retail just exhausted. And when you're a retail trader, what you tend to do is two things. You're either going to buy short-term options that are out of the money, or you're going to buy 3 to 4 months. And what you had is a lot of these names that expired this last OPEX here on the 21st. Those contracts were written, in a lot of the cases, like a year ago. And so what people were doing is they were betting on these stocks to just keep going up and up and up. And what happened is they topped February last year, March last year, November last year. But they all topped. And they all expired on this past Friday. And so all that money that was betting speculative on AMC and GME and all the Wall Street bets guys that were running up memes, and all of that money was thrown at short-term options or options that expired that were out of the money all around this past January. So that's the unwind that's been taking place, right? They had to take your money and they had to let those options expire worthless. Now that that's happened, we can see where we go from here. And this non-confirmation that we've seen makes it so that when these things do bounce, we do want the IWMs. And this setup here in IWM is gold. It's so good. I'm actually very excited to talk about it. We'll get to IWM here in a second. Let's just wrap up SPY and the other ones. So everyone wants to say SPY's, oh, look, we closed below the 40. I used the 40. Lots of people use the 50. I'm aware of that, right? These are all self-fulfilling prophecies, and none of these are set in stone. You use the 40, great. You use the 50, great. What is significant about this moving average is the fact that we closed below it, the end of the world. Does that mean we're now in a bear market? We closed below the 200 on the daily and the 40 on the weekly. Does that mean we're in a bear market? Right? And the question is, No, it takes more than just closing below a moving average to determine what type of market you're in. Okay? And these moving averages are lagging indicators. So one thing you want to just always remember is that this is just a representation of what's already happened. The reason it's sloping up is because historically price has gone higher. But one thing I want you to think about with these is, and this is why I have these Bollinger Bands on here all the time, is that these aren't just one line, right? Think of it like a moving average that then has some measure of dispersion, right? And in the bands use standard deviation. We want to be able to measure is like, hey, on average, like 95% of the time, price is within the bands. Not so much above or below this particular line. That's not relevant, right? If I have this line right here in the Bollinger Band is focused around the 20, but I can configure that to be focused around my blue 40. And if I do that, what do you see, right? So we were just talking about, hey, we closed below the weekly 40. Well, what do you see? Well, the weekly 40 that we closed below is also a Bollinger Band mean, or the middle of the band. And what's that telling you? Well, basically, price could fall to 407, and that would still be within the 95 percentile of this uptrend, right? Nothing crazy has happened. And I don't keep the bands on often, but they're just like a way for you to look at, hey, price is approaching a moving average, and I like to use SMA 10, SMA 20 as kind of my trailing stops. So for me, we were out of SPY. I mean, we've been out of SPY for a while now. But what we want to look at here is, when do we want to start buying SPY again? And the way I view this, and it just depends on your timeline, but like, if you're going to be buying this, totally acceptable to buy at the 20 or the 40 for long-term traders and hold until we lose the channel. And I mean, at minimum, hold until you see like SMA 5 and 10, or EMA 5 and SMA 10, until you see those curl down, right? And that didn't even happen here until the second or third week. I mean, you would have been all out right here when the 10 and the 20 are curling down. Well, that's kind of what we have here, but it's not what we have here, right? It may turn into this, but right now it's just this, right? It's just a pullback to mean. That's it. So we're going to move on from SPY. We focused a lot on that here for a second. Let's take a look at the opportunities that I see. So IWM is setting up quite well. And this one's, a little bit ahead. So you can see the PPO is already at the 0 line. Like, look at the SPY, right? Still at 1.8. Look at the Q's PPO, right? Almost at the 0, but at 1.48. And SMH is still the leader. And look how far she's got to go, 3, right? So IWM has PPO reset to negative. It's already negative, okay? And we've got a huge base down here, all right? And we can argue if we've hit this profit target or not. I like to do stuff like this. And we had come nowhere near hitting our profit target, but that's okay. And this thing had obviously stopped going higher back in January of 2021 when we talked about that, the end of that trade, right? So like, all this fear generated all this greed, and then they had to unwind it, right? And this is the unwind. And quite frankly, this could unwind on a quarterly basis as well. And right now we're just looking at, hey, this is a pullback into a rising 20. This is just standard market stuff. But what is not so good is you were at 11 and now you're at 8. And this PPO bear cross, histogram's negative. Every time the histogram's negative, you're at a lot of risk. You're just at a lot of risk, right? I mean, it is what it is. When it's positive, less risk. Positive, less risk. Now that it's negative, it's a lot of risk. But what I like to focus on a lot with these charts is structure. What is the structure of this? This is a correction. There's no doubt about it. So it's all like correction on the monthly time frame. I mean, we're talking a full year, 12 candles. Right now, we don't have this candle closed yet. So everyone wants to put their, bias on the market. There's 6 sessions left in this candle. There's no reason price can't close back inside the 207 range the same way. And I'm going to go back to look at this weekly. I love to point this stuff out, right? The same way coming into this week here on November 1st and November 8th, everyone was excited. Hey, we closed above the top of the balance. The PPO's curling up, right? We're seeing the positive histogram. The same way that looks very bullish and then immediately came into a sell is the same way this can look very, very bearish and immediately become a buy. Now, at what level? Well, that depends. I'd like to pull up the daily chart to show you structure, but I also want to show you on the daily chart just this deviation from mean. 1, 2, 3, 4 closes below the bottom of the Bollinger Band. So this type of move is in the 5% category. Anytime you close outside the range, it generally signals the end of the move, not the beginning of the move. And in this instance, right, same thing up here, 1, 2, 3, 4, 5, 6 days outside, and then that was the end of it. C'est la vie move was over. 1, 2, 3, 4 days outside. It's at 204. So you got to anticipate this correction ending around 195 or 187. And these are the extensions of this. And this looks like a very obvious zigzag to me. That's the pattern I see. And so if we're getting a zigzag, it could be that this is the end, or that this is a wave 4, right? And this is your 1, 2, 3, 4, and now we got one more all-time high. And if it's not, well, then look for 170, a 50% retrace. Let's reset the whole game, right? Maybe that's your 5. And now we've got our ABC like this. And that's freaking awesome. I mean, maybe it's coming to 170. Awesome. Okay. Same message on a lot of these. And I'm not going to go through this too much. Close below the 40. Close below the 200. Hey, is that the end of the world? Remember, these things aren't absolutes. It's not like a close below the 200, therefore this happens. That's not how it happens. It's just a lagging indicator. And try to think of these moving averages as just mean or home base, and price oscillates around the moving average in the direction of the slope of the moving average. And so in this instance, the trend is obviously up on any intermediate to long-term time frame, which means any short-term is an opportunity. Now, it's possible this is the top, and in order for us to really dig in on that, we'd have to see evidence on the monthly and quarterly time frames on all of these charts. But it's entirely possible it is. And I mean, that non-confirmation that we were talking about could be the very end of this bull market. And one thing I want to point out is that that's a very dangerous game to play. I don't like to guess the end of the bull market. That's not what we're here to do. We're here to look at, is this a buying opportunity or not? And where are we within the context of the correction? Did the correction just start, or is the correction ending? Okay. And that's kind of a theme we're going to focus on here. And so like when we look at this setup here, when we broke the low at 377, 350 was the level. Where did we close the week? 351. And that's on a monthly basis. Okay, maybe they're going to 330. Strong buy. And where's the sell? 400. So you do the math on the risk reward. And if you're someone coming in trying to short this market, look, 1, 2, 3, 4 days below the bottom of the Bollinger Band, hasn't touched the middle of the Bollinger Band since 400. SMA 20's at 385. I just want to look at this. 9% below average. This never happens. Go back and look. Prove me wrong. Here we go. There it was, right? It's super rare event that's happened maybe 3 times. Here's QQQ, another buy setup coming in to start the week. Same thing over here. Close below the 40, close below the weekly 40 and the daily 200. What does that mean? It means that it could be more pain, but you got to remember, where did she come from? Right? These things are already down. Does this look like the start of pain, or does it look like pain has been going on for some time? Right? And so you can't, like up here, I was a seller. I can go back and show you the tweets. I can show you, like, we were selling this. I sold here. I did not buy here. And I was an advocate of avoid all tech this entire time. I think we traded it right here and then got stopped out here. And that was it. I mean, tech is at the point where everyone was long and now everyone's unwinding. And when that unwind completes, like we talked about, maybe it's here, it's a freaking buy. It's always a buy. I mean, do you want to bet that it's this time? Okay, maybe it is. But you got to close below the 10 on the monthly. We haven't closed below the 10 on the monthly since March of 2020. So that's your first step, bears. And until you do that, there ain't nothing to talk about. And if you're a bear and there's 6 sessions left in the candle here on the month, and price is approaching 340 and you don't cover, you deserve to lose. This is not how you play the game. Price doesn't just go straight up or straight down, right? And when it does, you get a vicious counter trend rally. It's just how it works every time. Even right here, look at this massive run. Oh, look, we pulled back. That was the higher low. No, it wasn't the higher low. This low, and all of these buyers got trapped. Then they got saved. That's a different setup for a different day. The point is, when you have these extended moves, you get vicious rallies in the opposite direction, and you don't take the trade when you've spent 4 days below the bottom of the Bollinger Band. And if you were to short this, you'd be a seller at the bottom of the Bollinger Band. Where's that? That's 366. Just think about that. Close at 350. The next sell for me as a trader, or me as an algo, or a machine, would be at this line. They're not selling down here. That's retail. So when you look at this, you gotta keep the context of these moves, right? Like, there is going to be a bounce back in the opposite direction. Everyone psychologically forgot that markets go down, and this is a friendly reminder. So yeah, let's take a look here just a little bit more at IWM. We showed you the QQQ buy. I think we're there. I think this is the buy on IWM as well, 195. I think we're basically there. Obviously, the volume on all of these candles is the most volume since the March lows. Okay, maybe it's nothing. It would be significant to a bear if that occurred up here. But it didn't. It occurred down here, in my opinion, where they were buying. And yeah, they bought here, tried to rally it, and failed. And now they're selling it all back. And that's kind of what happens when you get trapped on one side of the trade. But this is a correction. It's pretty obvious, right? Here's our ABC. Here's our 5-wave move lower. Sorry, we're it's a little early here. This is your pattern, so it's a nice little ABC zigzag. Here's what we're looking for. We talked about that 195, and then here's the structure: 1, 2, 3, 4, 5, something like that. And you look for the same thing down here, which is pretty much where we are, okay, in terms of market symmetry. I'm just telling you, if you're a bear, congrats. You should be taking profit. You should be looking to short again any 3-wave moves into this trend line here. That's how you play this, okay? Don't be confused. just because the market has gone in one direction for a while now doesn't mean it will continue that way. Now, the reality is this very well could be a major top, distribution top. If that's the case, we're going to get a clue by this Friday and ultimately January 31st, which is a week from Monday. So keep an eye on the IWM chart. Keep an eye on the IYT chart. These charts are going to tell you what's coming. To me, this chart has to break this low here at 241. And if they break the 241, you have yourself a nice little ABC flat. And then maybe price can go higher from there. But the reality is, this sucker could come all the way back down, just like IWM, to this 2018 high. Confirm that that is now demand, and that would look great. I mean, you know, at some point, all of these things need to have a retracement, right? And so, like, same thing here. That's when you had that big retracement. And you had it once, and so that's what led to this confusion, to say the least. But let's take a look at it again, right? So this was the rally here. Well, now where's the 50%? Well, where do you think? Right here, right? Where all of these people traded before. And then what does that do? It's that rule of polarity, right? What was resistance can now be confirmed as demand. You can come down here and prove that. And you do have this bearish divergence on the transports, right? And it's definitely not a good look. I'm not going to lie to you. And if you don't have IWM and IYT going higher, then c'est la vie. That's the non-confirmation. If those two aren't confirming the SPY move, then SPY has to go back to where the non-confirmation began, which was October lows, all right? 426. And the thing with all of these charts is we're almost there. I mean, here's SMH. This is a very interesting one because she has now a bearish harami that looks to be getting confirmed. So if SMH closes below 288.14 and in the next 6 sessions they're not above that, this is over. I mean, it's sell all rallies that occur into 290 until price gets to 257, 235, or 216, depending on how this structure plays out. And I mean, look at what happened. You went straight up for a year and a half, almost 2 years. So, you know, at some point, this has to correct. And if you look at the monthly pattern here, all monthly higher lows still. Last higher lows at 248.78. Okay? So as long as they hold 248.78, the monthly higher low pattern on SMH is intact. 248 is another 10% lower. All right? And just keep the context. Where has she come from? What is the probability of her staying in that 95% or that 5% category for a long time, right? So like the probability is they're going to stay inside the bands. That's the 95%. Well, here you go. 1, 2, 3, 4 sessions below, and it's accelerating to the downside. All right. And this divergence here that you had, this positive divergence, higher, not even a positive divergence, I'm sorry. The higher lows being confirmed in momentum, you don't have here. You now have a bearish hidden divergence where you have a higher low in price, but yet you do not have a higher low in momentum. So that's not a good sign for the bulls, right? There's lots of things that are definitely pointing to mega top. And if mega top is it, you look for 50% retraces. And if you look at the underlying components a lot of these names, like the NVIDIAs and things like that, they've already done these corrections. Sorry, NVIDIA is not loading. Oh, now it's hosed, but that's okay. Yeah, so we're back here at the weekly 40 for SMH. We're back here at this previous, zone, this congestion zone. We've already tested it once. We're launching up. I mean, this is technically a buy, right? There's no reason to think that all of a sudden this is going to fall apart. But if she gets below the 200 here, if she does get below this 270 level, I mean, it's almost a guarantee that she's going to come all the way back to 250. And this thing is very, very volatile. SMH has been the leader for a long time, and she's just kind of fallen apart now. So you got to be very, very careful, especially with the names that are inside. I mean, check this out. Look at this name, DNMR. I mean, this is what I'm talking about. People are talking about a bear market. No one was talking about a bear market in February of 2021. No one. Yet the stock can go from $66 to $4. All right, and check out this symmetry. I mean, it's like perfect, whether you put it from there where that original low was or right there, that high. I mean, we're there. They've done the unwind that needed to happen. And a lot of these SPACs are toast. I mean, even the names like Crocs that have been leaders within IWM pulled all the way back here. I mean, why not come back here and fill this gap? Like a lot of these names are freaking done. Let's pull up XLF because that's one I've been talking. XLF and XLE have kind of been the leaders. But you got the same problem here. Another PPO bearish divergence. Another divergence. So a high in October and a lower high here in January, even though we got a higher high in price. We didn't hit the profit targets, right? Came up short of the profit targets. I'm not really sure what you have here anymore. I mean, it's possible this is still a 5-wave move up, and now we're just retracing that 5-wave, and, we're coming into the 85%, which is my final line of the sand, 37.88, which aligns with this gap fill. Maybe that's what it is, or maybe this is the top. And you look at the monthly, this, in fact, doesn't have the PPO curling down yet. Histogram is still positive, and they're still above a rising 10. And still in a series of higher lows and higher highs. And for that series of higher lows and higher highs to break, XLF would have to break 37.21, right? Just like SMH had a long way to go, XLF still has a way to go. But if that happens here on the monthly, I want to point out, if XLF breaks 37.21 low, then in this 1 month, she's retraced the last 6 months of trading and put in a outside bearish reversal candle. And an outside bearish reversal candle is the start of a long-term reversal if found on the monthly. Just keep that in mind. Like, here's an outside bearish reversal, right? They come at tops. Here's one. You got to be very careful when you see them. And yeah, I mean, if you look at this market, right, like gold isn't holding. There really isn't anywhere to put your money in terms of like TLT isn't holding. Bitcoin is now at the 20 on the monthly. First time a tag of the rising 20 on the monthly since March 2020. Will it be a buy? We'll see. This could certainly be a triangle that's forming right now. Something like this. It could also be a flat, a little expanded flat. And if it's an expanded flat, you would expect it to tag this line. Something like A, B, C, D. It could even be that, like you saw on SPY in 2018, 2022. That pattern. So we don't know. All I know is this is a sell the rip environment. Any rips into 45,000 are now to be sold. And the next buy, which did come this weekend, was at 35. But if this fails here, it's 28K. And that is the last line in the sand. Below that, good chance she's going to 20K. But realistically, this is your wave one. And so whenever you have these types of moves, the retrace is back to wave one, right? It's always back to wave one. Even when you put this in, see the 85% brings you to wave one. And Bitcoin will certainly have an 85% correction. There's just no other way around it. They're not taking a 50% correction route. So yeah, that's kind of the view on Bitcoin. Not a great look, to be honest. Let's take a look at gold. You know, not a great look either. I mean, everyone's obsessed with this cup and handle pattern, but you know, until we really get out of this range, she's just stuck, right? She's stuck, and there's lots of distribution here. We can zoom in here to the weekly and see how they close the week. Yeah, selling on the weekly. I mean, can't even fill this gap, and that was it. Right? Like all this panic and fear in the markets, and gold is going nowhere. Like literally nowhere, and has gone nowhere for a year and a half. So all the inflation, gold did nothing. Nothing. Right? All that big 7%, 9%, whatever the inflation numbers are, gold, all according to the price of GLD ETF, was all priced in. This trade is the most frustrating trades ever. I just avoid this sector. It literally goes nowhere. Yet people keep getting sucked in. Let's see if we can pull up TLT. Also gone nowhere. Right? Hey, you nailed the lows back here in March. TLT's at levels not seen since last fucking February. And excuse my language. So in this market, right, where you normally would say, hey, we're going to put our risk into the equity market. It's been paying, it's been beating TLT. And we can do compare charts and pair charts, and we've done all that, TLT versus SPY and all these things. And they still are telling you that your money should be in the equities. You can do that with gold and silver. It's telling you your money should still be in equities. And despite all of that, the diversified portfolio is really getting just hammered. I mean, the only safe haven has been cash. Everything has gone lower. And when you see environments like that, you got to be very cautious. Because typically what will happen is a flight to safety, right? Like your XLU, XLP, defensive sectors will start to kick in. GLD, TLT will start to see love. And things like IWM and SPY will go lower. Well, in this instance, we're not seeing that. We're seeing everything go lower and everything. It was just like that in March 2020 low, right? Gold went lower, SPY went lower. Everything's correlated to SPY. And like, do you think you have this like diversity? But you don't. It's all positively correlated. And as a result, you end up just sitting around waiting for the next trade. And for us, that was XLF and XLE, and those were great. But then you get an all-time high, and then all of a sudden, within literally 2 sessions, you've got a 5% correction, and then 2 more sessions, and you're down 8%, and basically just slice through all of these moving averages like there's no demand here. Very interesting setup, but I will say this is different than the others. If this is, 5-wave move up, you could certainly say this is your ABC down. All right. And that would prime this market for a massive move up into these levels here. But I'm not a buyer. I'm not buying this. I don't believe it. I do believe that the XLF trade is dead, and it was just the last horse to get shot. I think it's a buy back here, just like IWM and all these other things. Like I pointed out with IWM, is revisiting its 2018 highs. We need to see the same thing happen with all these sectors, right? And here's IWM doing the same thing. Right, so this is what I mean by IWM's leading, right? IWM will hit its high here first, before IYT does and before XLF do. Either way, keep an eye on those three sectors, and XLE in particular. Like, they're going to have the opportunity moving forward, and if not, it'll flow back into tech. So we're going to see which like side of the coin is going to win. I do believe that the narrative that value is the place to be and growth is to be avoided is incorrect. This was the opposite narrative that was sold last year to retail, which is why retail piled into the worst stocks at the worst time. They're doing the same thing to them here. They're looking for retail to sell the bottom on growth and to buy the top on value. And what do I mean by that? I mean names like APA, which were just killer names for the last year. I mean, look, dude, no one wanted APA at $7. No one wanted APA at 15, and here she is at 30, and now everyone wants her. I don't believe it. And again, just because we got above the 40, does that mean we're now in an uptrend? No, it does not. Why? Because the 40 is still sloping down. All right, and the 40's below the 200. This is still a downtrend. Yeah, you closed above the high here at 26.57, which is really important. And if they remain above that high and they base above this high, then she will go to all-time highs. I don't see why that can't happen. But it's a lot less likely to happen this year than most people think. It would likely flag and then move higher. It's not just going to slice right through this high on the first candle after rallying 1,000%. Just keep the context. Where did the move come from and where is it going? As a swing trade, you have to think like that. You don't have to know the exact numbers. You can configure your tools to tell you when it happens, right? But this to me is another high on less momentum. Short-term time frame is the time frame to trade. When this daily chart rolls, you get out. Why? Because the weekly and monthly are not that bullish yet. But that being said, like I keep saying, if they stay above this level on the monthly, this 26 level, then they can base up here and definitely go higher. There's no reason that can't happen. But it's unlikely to just waltz right up. They're going to need time to go sideways. And so, yeah, the oil trade, the finance trades, they were the trades that died last. That, to me, is indicative that this could be a wave 5 top, and this pain could be here for a long time. It's either that or a wave 4 low, and we're going to get one more all-time high, and then you get all the pain. So either way, you got to respect the risk that's in front of you. I'm waiting for momentum to return before I deploy any more capital. I've deployed some capital into SMH, into QQQ on Thursday and Friday. I did not nail the lows. I am bloody on both of those positions. I've liquidated half of my XLF towards the all-time highs. I've got the remainder of that half at the weekly 40 entry. That's my trailing stop. That if that is lost, this trade is done. So just try to keep your eyes open on those sectors, and ultimately when they turn, when IWM turns bull, when IYT turns bull, the rest of the market will as well. And on that note, I know this is a bit long in the tooth, but I had a lot to discuss. I'm ending this video. If you like the content, hit the like button, subscribe to the channel, and we'll check you out in the next one.